Good morning and good evening, everybody. On behalf of the Cornell China Center and the Emerging Markets Institute at Cornell University, welcome to this webinar in which we will be discussing the concept of emerging markets. Emerging markets is the object of research and all of our activities at the Emerging Markets Institute, but this is a concept that has evolved. Which countries are emerging markets? This is very important, not only for research, for education, but also for investors, because there are a number of funds that focus on emerging markets. Are we following the right direction when we point to this country or that one as emerging market or not? So that will be the discussion today with my colleague Ying Hua, the director of the Cornell China Center, and Amiro, faculty fellow at the Emerging Markets Institute, Mihika Bajate and Andrew Lim, students at the undergraduate program at Cornell University and also researchers at EMI, and Mark Mobius, very well known in the field, and the founder of Mark Mobius Capital. So thank you all for joining. And I'll pass the word to Ying.
Thanks, Lourdes. Hello, I'm Ying Hua. I'm the director of Cornell China Center. We serve as a bridge between Cornell and China and work hard to be a facilitator to bring great minds together, just like today, to foster meaningful dialogues and innovative collaboration. So we're very happy to have this opportunity to co-host this webinar with EMI on the eCornell platform. So let me first introduce Professor Amiro, who is a faculty fellow at the Emerging Market Institute, to kick off the panelist remarks by discussing the definition of emerging market. Anne, please.
Okay, good morning, everybody. It's a pleasure to be here today. And I'll go straight into the issue is basically what is an emerging market. The first thing that perhaps we should remember is that there is no agreed definition of an emerging market. Initially, it was a financial concept put out by Antoine van Regmel from the IFC, and I'm sure Mark could comment on that because he was closely involved in these issues from the beginning. But then it moved from the financial area to the economic realm. Initially, as I said, as a financial concept, it referred to markets where there were very good investment opportunity, but at the same time, high risk and volatility. When it moved to the economic realm, it basically meant, or it referred to economies which are moving up the development ladders. So there are very important growth opportunities. There is a dynamic perspective. The economy is emerging, is booming, but at the same time, there are still a lot of risk and the economies are relatively vulnerable. And we have seen that over the past 20 years. What is also interesting is that there has been over time some sort of not a confusion, but emerging economy and developing economies have been used interchangeably, because the idea is that they are not advanced economies. But at the end of the day, you have a number of developing economies that are emerging, like Korea, not Korea, South Korea, that's not a good example, but Kenya, Ghana, and so on. And you have also developing economies that are not emerging. They have faced serious economic problems over the years. So these two terms, in a way, should not be used interchangeably. Now, we faced an issue or a challenge 5 years ago when we put out our first emerging market multinational report, because we had to define what we were talking about, what were the animals. And the list, there were lists, but very, with some sort of diversity according to whom which organization or think tank you are looking at. So we decided to first look at those economies which are basically moving up the development ladders, and to take perhaps the top of these economies so that we have a group which is representative enough and big enough to illustrate the phenomenon that we wanted to look at, which is the rise of emerging economies and their enterprises in the world. And that was really the rationale who led us to create a group of 20 top emerging economies that we called the E20 or the Emerging 20. To do that, we look at their GDP per capita, we look at the demography and their influence in global trade and investment. We also consider lists which were put out by the think tanks or index provider and so on. That was 20 years ago. We had in the group Korea, China, Poland, and so on. 5 years ago, that is in 2021, we decided to revisit this list. Two reasons triggered that. The first one is that we had Korea in the group, and it is an economy which has grown so much that its GDP per capita now is higher than that of Spain or Greece, for instance. So we had to revisit the issue. We also were faced with the case of China. So we decided to go back to the drawing board and look at the whole population of countries. And we used first as a criteria, we took out the advanced economy, meaning Korea is not in the list any longer. We took consider that a country which had a too small population were not really those we were interested in, because economic influence is very important, but we have also seen that over the years, emerging economies have got a substantial geopolitical influence. So that was the first thing out of the population of the nation of the world that we cleared off. And then we used the GDP per capita, the demography, the share in global trade, and poverty indices. To each of these parameters, we gave a weight to end up with a group that we could consider as emerging economy, with perhaps some divergences at the margin. We classified, ranked this country by nominal GDP. And of course, the number one was China. And I will highlight the case of China, because some people say that it's not really an emerging economy. At the same time, it's not a developed economy. Yes, indeed, it is the second economy in the world. Its GDP is 70% the US GDP globally, in nominal term. It has made substantial advances in technology innovation, but it still has several 100 million people at the poverty level. So what we did is that we took definitely China, and we took the 20 countries below China in terms of GDP size. And we created this new group, which is called the E20 plus one. The plus one refers to China because we wanted to highlight the unique position of the country in the global economy. And I will stop there. That was just to give you a background to our work on the issue.
Thank you very much, Anne. So Anne is mentioning, we launched the EMI report in 2016. And this year, the 6th edition, we did a number of things. One was to review the E20 concept as undefined. And second, also, we refocus on ESG, which is a very important issue. And I hope that Mark, who is an expert on that, can refer to that as well. I also wanted to mention that the EMI report is the result of the collaboration with the MNET network at the OECD Development Center, with UNCTAD and the team led by James Zhang in the World Investment Report, IFC from the World Bank, and Momina Jasudin and Pietro worked with us very closely this year. And also this year, we started working with the Inter-American Development Bank. Also, we have a number of researchers in the center led by Daniel Dos Anjos, and also Vinita Pachava, and we have here two other students, Mihika and Andrew. But definitely, these discussions are the result of a lot of thinking and a lot of reviewing our concepts with leaders in the field. And I thank you, all of them. So last year, we started another exercise, which was very interesting, led by Andrew and Mihika in collaboration with the team, that we looked at a ranking. So often emerging markets are compared to developed countries, and of course we need to do so, but we wanted to look at them And actually, sometimes when you compare with the US or Germany or even the OECD average, then it's a little bit disappointing. However, we have seen that in the last 20 years, emerging markets have grown a lot on average. And that's why we thought that this exercise was very interesting. So I'll pass the word to Andrew, who will present the ranking. Thank you, Andrew.
Thank you, Lourdes. Going off that, with the shifting definitions, what it means to be an emerging market, it's now quite useful to identify some key metrics to analyze growth in our countries of interest, and more specifically, how we can compare countries with one another. So last year, Mejika and I designed a project, as Lourdes mentioned earlier, to rank E20 countries by their growth in the last decade. Specifically, we thought it would be useful to analyze countries' growth in their economic, technological, and social progress and rank them accordingly in a concise manner. And we ultimately decided to focus on three key metrics. Firstly, to measure economic growth, we used GDP annual growth. To measure technological progress, we primarily used a metric called mobile penetration, which we found to be a reliable indicator of a country's progress in advancing the quality and quantity of cellular and power of infrastructure in the country, which nowadays is a really important factor for foreign and domestic investors. Lastly, to highlight social progress and growth for each country, we decided to use what the UNDP calls the Human Development Index, which takes into account three factors: the average income before tax, the education level, and life expectancy of the country. And after calculating our averages and numbers for each country and their annual percent changes, we decided to, for each category, GDP annual growth, HDI, and also mobile penetration, we decided to calculate the quartile and median ranges of our set of countries. We then compared to, depending on a country's percentage growth in relation to the median quartile ranges, we awarded them with a higher ranking in the respective categories. We finally, after calculating these rankings for each category, for example, in GDP annual growth, in mobile penetration, and in Human Development Index, we gave them a final ranking from 1 to 4 stars. We found that China and Bangladesh were clear winners. They're in fact tied with 4 stars each. They shared remarkable progress in their economic growth, as well as advancing the well-being of their livelihood of their citizens, as well as advancing infrastructure throughout their country. We also saw countries like India, Philippines, and Indonesia followed up, which also did remarkably well in the past decade. Countries that didn't really show that much growth were countries like Brazil, Argentina, and South Africa, and Mexico, which which made sense because these countries kind of had a lot of political and economic instability entering into the decade. We understand there are limitations in looking purely at growth rates because it rewards countries that enter the decade with already historically low numbers. But we still think it's really important, and we definitely can reward countries that have done well. For example, China, obviously, but more interestingly, countries like Bangladesh. You often don't really hear about Bangladesh in the news, but after looking at these key metrics and their growth rates, then we can kind of say they're a remarkable country in their own right, with lots of potential, and we can now call them an emerging market. It is really difficult to compare countries with one another because they all have their different political, social, cultural, and just histories in general, which makes it quite useful to look at countries in their own right. And this is where I pass it on to Mejika, where we did another similar project where we analyzed achievements within countries.
Thank you, Andrew. So Andrew and I, along with the rest of the EMI research team, started this project of developing a set of key milestones for the E20 emerging markets, specifically over the decade of starting in 2010 and ending in 2020. So what we did was, for every country in the E20, we compiled a list of the most important economic, social, and technological milestones, which we found partly through our own research and also by consulting academics and experts on those specific countries. This was a particularly interesting decade to study, as the world started out, started the decade out fresh out of the Great Recession, and ended it, in the chaos of a global pandemic, nationwide shutdowns, and closing borders. For many emerging markets, they're trapped in this sort of cycle. We like to compare it to the Greek myth about Sisyphus, in which he rolls the boulder up the hill only for it to be pushed back down again. So for many emerging markets, they made huge strides in many areas, and economic development, and then some sort of fresh recession or crisis kind of undid some of the economic growth that they'd achieved. However, through our project on emerging market milestones, we were really able to highlight, as Andrew mentioned, that even the countries that didn't fare as well economically progressed in other ways. And so overall, the decade really was an excellent period for emerging markets and the E20 specifically. So, going into some specific examples for Latin America, Brazil, for example, faced political turmoil, declining GDP growth, and was also severely impacted by the pandemic. But it also made significant strides in decreasing extreme poverty, and it halved its poverty rate over the course of the decade, which is amazing. Argentina struggled with its debt crisis, but at the same time, it became a technological leader in Latin America and is now home to many of the region's biggest startups. In 2016, Colombia signed its historic peace deal with FARC, ending decades of fighting. So there has been progress even in these countries that didn't, do well economically. Looking at Africa, a huge milestone for many of the countries was the signing of the 2018 African Free Trade Agreement. Nigeria and many other countries saw huge increases in their literacy and education rates. And then South Africa, which has really dealt with economic stagnation over the latter half of the decade, saw a huge rise in technology and especially financial technology companies, slowly kind of narrowing the financial access gap in the country and across the continent as well. And then finally, looking at Asian countries, which, as Andrew mentioned, out of all the emerging markets in the E20 really exhibited the most economic growth, from China making strides in, combating poverty and, becoming a leader in business, to the rapid digitization of India's economy and India becoming the 5th largest economy in 2020. The Philippines announced a program in 2017, the Build, Build, Build program, that really focused on developing the country's infrastructure. And so there have been a lot of key milestones in Asian emerging markets. And, as Andrew mentioned in the discussion of the rankings as well, Asian economies have benefited enormously over the last decade. But as Lourdes and Anne mentioned with the discussion of the E20+1 in the emerging markets report, China really is a very interesting case. And it, in some cases sets itself apart from some of these other emerging markets. So I'm going to hand it over to Ying to discuss a little bit more about China's status as an emerging market.
Thanks, Mahika. This is definitely an insightful study. I'm actually very much looking forward to read the report with such rich information. So I'll say just a few more words about China. As both Anne and Mahika pointed out, China is a unique or interesting case, right, in this discussion about emerging market. And the term E20+1 also clearly indicate, right, there's a special situation or even a debate. It is obvious that China is now the 2nd largest economy in the world. The volume is huge. But I think one important characteristic of China to keep in mind when we view or discuss topics on China is, especially on economic matters, is that China is large, very large, and the development is very uneven across the country, from region to region, from between the metropolitan clusters and the rural areas. So on one hand, as a country, China actually, I think Chinese government just announced that it finally eliminated extreme poverty only in February this year. But on the other hand, the income level, development stage, the connectivity to the world are drastically different, right, between regions. I'm sure there are already areas in China where investors and companies no longer see many opportunities of a low invest for high return, low labor costs, abundant natural resources, which are some of the characteristics of emerging markets. But instead, strong industry bases and increasing sort of increasingly standardized market mechanism. And I think, so we're talking about growth and change over time. The national policy in China and the growing sort of connectivity due to the technology advancement are reducing the discrepancy between areas in the long term, but it's a very slow process. So I think the unevenness will continue to be something that business needs to sort of keep in mind when talking about China, whether it's an emerging market or not. So I think we'll have time to come back to the topic around China a bit later in this webinar. So let me pass the floor to Mr. Mark Mobis, the funding partner of the Mobis Capital Partners. Mark, please.
Thank you very much for that very interesting exposition of the research. I'm also looking forward to reading that research because it sounds like it's very innovative and quite groundbreaking in many ways. The whole issue of the definition of the emerging markets is very important at this stage of the game, and the work that Anne has done is very, very critical because defining an emerging market today is very, very different from when we started in 1987. At that time, emerging markets included all of the low and middle income countries as defined by the World Bank. And at that time, it included all of Latin America. It included all of Africa. It included all of Asia, with the exception of Japan, Australia, New Zealand. And of course, in those days, Eastern Europe was not in place yet because it was still under the so-called Iron Curtain. But then after that, Eastern Europe came under that purview. Now, as the research that Anthony has pointed out, the definition of, what is low income or high income, and of course, Anne's work has shown that defining where we can separate the low income, middle income, and high income becomes very, very tenuous. The other problem that we face now is that more and more as an investor, more and more the companies that are listed in New York or London and so forth have the majority of their earnings in emerging markets. So the question that we have as a investor is, what is an emerging market company? Of course, defining what an emerging market country is one thing, but then looking at what company is an emerging market company. And this came home to me just yesterday. We were talking to a German company that makes the lenses for eyes. They do the operations to correct eyesight. And they said their business in China has become the biggest part of their business, and they expect in the future China will be their main source of income. So now, is this an emerging market company or not? It's a German company. It's based in Germany, but they have offices all over China. And of course, the Chinese business is going to become very, very important. So these are the challenges that we have to look at. And hopefully the work that you have done, that the team there at Cornell have done, can help us better define an emerging market country, as well as in the future, an emerging market company. Thanks. Let me turn it back to you.
Thanks, Mark. So in the next 15 minutes or so, I'll ask the panelists a few questions so they get to elaborate on some of the key points that they've made in their earlier remarks. So the first question is to both Anne and Mark. So from your perspectives, how does the concept of emerging markets apply to major players like China, the second biggest economy in the world, and also India, which is now the fifth biggest economy? So we sort of went back to the bigger players in that list.
Well, just let me start out by saying China is a very, very critical player at this stage of the game because one of the characteristics of investing today is that more and more people are using ETF, exchange-traded funds, index funds, and are generally indexing their portfolios. Now, what does that mean? It means that with China representing 30-40% of an index, which is normal for emerging markets index, China becomes overwhelming in terms of the makeup of the portfolio. So that some investors are now beginning to say, now, wait a minute, China's become so big, let's put China in a separate category and treat that as a separate emerging market item. And the rest of the emerging markets will look at those differently. Now, India, of course, is coming up, but is nowhere near the size in market capitalization of China. So the question is, of course, India is moving up very quickly, but the question of where they are going to be in maybe 10, 15 years is a moot point. It's true that China's growth will be slowing. Obviously, it has to slow given the size of the economy. And India is moving very fast, but it'll take quite a long time for them to equal each other, for India to become as big as China. So it's a very, very important question going forward.
And may I invite you to comment?
Yes, definitely. I mean, I can't agree more with Mark, actually. He has put it also from a financial perspective, but definitely from a macro perspective. First, I'm quite happy to see that the financial world is considering China as an emerging market, but of a special category, because it's exactly what definitely what we did. This is why we have this E20+1 acronym, if you want, or logo. So some people actually are really asking the question, is China an emerging market? And for all the reasons we have said, that I still believe it is an emerging market, because the aspiration to go to up is still there, and the dynamism is here. Now, there is also a question, is that whether the status of an advanced economy is really something. Perhaps there is a third voice, advanced, emerging, and another position, and it would bring us in a very long discussion about the categorization of countries. In the case of India, I think the case is perhaps a little clearer, because you still, yes, definitely have a very significant growth rate, 6 or 7%. So you have, it's the 5th economy in the world in terms of size, and it went up the ranks very quickly over the past five years. I think it was rank 10 or so at the beginning of the past decade. So the jump has been very significant. But at the same time, if we look at the number, 20% of the Indian population is at the national poverty line. So there is really room for improvement. And for me, the word emerging is what matters in the emerging economy or emerging market. Is this dynamic aspect, the growth rates towards a better level of development. So for me, there is no question they still are emerging economies.
Thanks. And,
Anna, that's a very, very important point you just made in terms of growth, because at the end of the day, the reason why we started in emerging markets because of growth. We expected these to grow faster, which in fact they have. They're starting from a low base. Therefore, the growth prospects are very strong. So I think that's a very, very important point you've made.
Thanks, Mark. And one more question to both of you, so just bear with me. So we talked about the China and India, the bigger players. So how about the relationship between the economies, the engagement? So could you say a few more things about, talk a little bit more about the emerging market looking inward to other emerging markets, not necessarily to US and Europe, to the mature market?
Do you want me to begin? Okay.
Yes,
so yes, the first thing is that there is definitely a movement which indicate that emerging markets by themselves they are a force, and they work, they trade, they invest in each other. Which is very interesting is that in a number of countries, the largest investors are emerging economies, like in Latin America, China, is number one as an investor in a number of Latin American economy. Same thing in Africa. So, but even putting China aside, there is a lot of as we used to call it in international or UN jargon, South-South economic relation. But this has definitely increased, and I can just refer to you to reports made by the UN or UNCTAD on South-South foreign direct investment. So that is in the economics sphere. But one, for instance, what is very also interesting is that, as Lourdes kind of hinted, is that the emerging world is much more than the economics. It's also the geopolitics and all the relation. And it's very remarkable that in the past 3 or 4 years, there has been 2 major agreements signed among mainly or essentially emerging economy. One is in Africa. The African one is very interesting. It has taken, I would say, decades to come up, but it's the African trade unions, which aims at taking a free trade area within the African continent. So you see that the African and the emerging economy, they work, they look at each other, because also there is a huge consumer potential there also. And then you have the RCEP in Asia. These are just 2 illustrations that emerging economy are also increasingly working among others. So that's what you say, looking inwards, not really looking within their own groups of potential investment and trade partners.
Yes, that's a very, very important point you've made. One of the things I've noticed in traveling around the emerging markets world is that there is more and more interaction between these emerging market countries. Of course, China is the best example. The Belt and Road Project impacts a lot of these emerging market countries in Asia, Africa, and even Latin America. And also you see investments flowing between these countries. For example, if you look at Taiwan, Taiwan hires software engineers from China. They do manufacturing in China. And of course, they're moving further afield into India, hiring software people from India and other parts of the emerging markets world. So this is happening at a very rapid pace. And as these emerging market countries grow, of course, they will be reaching out to other emerging market countries to lower their costs in one way or the other. The way that China's moved manufacturing to Vietnam is one good example of that, where, they're lowering the cost of high labor input goods. But China's not the only one. India has also been moving into emerging market countries, not only to access talent, but also to sell their goods and services. So we're going to see more and more in that going forward.
Thanks, Mark. So we talked about growth, interactions, and then I'd like to sort of go back to the milestones and then the contents of the report a bit more. So the next question is to you, Mihika. Are there any similarities in the types of milestones you see for countries that have exhibited a lot of growth versus countries that have not?
Yeah, definitely. So, as I touched on a little bit earlier, a lot of the milestones, that were recorded for countries that had low economic growth included, things like human rights. If you look at in Latin America and Colombia, you had the legalization of same-sex marriage. And then in Chile, they also banned discrimination based on sexual orientation in 2012. So we had a lot of those kinds of social milestones. And then also a lot of technological development. So in, a lot of the countries that have suffered more in terms of GDP and economic growth, have had great technological milestones, like I mentioned, the financial technology companies in South Africa, for example. And then, if you look at the countries which have, higher GDPs and more GDP growth, even, South Korea, for example, which, as Anne mentioned, has kind of graduated our list of emerging markets this year. And, China and India, all of which are some of the key players in emerging markets, we see a lot of space exploration over the last decade, which has been really interesting. So, South Korea launched the first Korean-made satellite into orbit in 2013. China and India both launched efforts to conduct soft landings on the moon. So it was really interesting to see some of those trends between countries and similar groups within the E20 that were really doing very similar things and had similar achievements over the last decade.
Thanks. While listening to you, Andrew, I feel like you've spent a lot of time looking at the matrix, the indicators. I'll ask one question to you then. You mentioned milestones can potentially highlight growth that purely quantitative measures cannot. So how does your set of milestones reflect an age of increasing globalization?
Thank you, Ying. A lot of metrics such as, analyzing, foreign direct investment and FDI outflows as well as trade inflows can be quite useful in indicating how a country is embracing globalization and foreign countries. But it doesn't really tell us the full story. It can really just give us maybe a little glimpse. It's not necessarily the best indicator of a country's outlook on, globalization in upcoming years, nor are they also, the best indicator of, social or political globalization as well. And so we decided to, in our Milestones project, again, as I mentioned earlier, we kind of went region by region and country to country to help us identify particular achievements that countries have gone to really embrace globalization and cooperation on a global level. And, for instance, we found a lot of trade deals this decade, which you probably would have heard of already, but I'll mention it again, such as the Pacific Trade Alliance in South America. We had the USCMA as well as the African Free Trade Agreement. And last year, we also saw the Regional Comprehensive Economic Partnership that was signed. And this is expected to be the largest trade bloc in history, expected to eliminate almost 90% of tariffs on imports between these countries and kind of bring back economic attention to the Southeast Asian region as well. It concerns many of the countries in our E20 list. And it's exciting to see the development of that. Earlier on in the decade, we also saw the foundation of the New Development Bank, which includes all BRICS countries as well as Bangladesh and the United Arab Emirates. And the New Development Bank aims to promote, infrastructure and sustainable development projects in membership countries, as well as establishing a network of global partners in general. We also saw a lot of projects, as Mark mentioned earlier, the Belt and Road Initiative, and even in smaller countries such as Thailand, we saw them implement individual policies and plans to really embrace globalization. For instance, in Thailand, they recently implemented Thailand 4.0, which is a plan to kind of divert themselves away from a historically agricultural and natural resource reliant economy and into a more of an innovation-based economy. And one of the key ways of doing this is by providing significant investment incentives for foreign multinationals to enter the nation and to invest. Overall, the attitude towards globalization this year kind of has shifted due to COVID, as well as some geopolitical reasons, as well as the supply chain crisis as well. But nonetheless, it's still useful to kind of look at the advancements countries have made in the past decade towards globalization. And it's interesting to see how this will pan out.
Thanks, Andrew. And may I also invite Lourdes to because I know this is also what you spend a lot of time on with the researchers. Please.
I just wanted to add what in relation to what Andrew just said, the institutionalization of what is happening. We had not seen this before, but the launch of this new multilateral. So we had since the end of the Second World War, we had the Bretton Woods arrangements with, of course, the World Bank and the IMF being key for any financing with the IFC, part of the World Bank, for the private sector. And now, as Andrew mentioned, we see the new development bank. So Jim O'Neill, 10 years ago, launched the BRICS. So the BRICS, guess what? They are meeting regularly, still today, and they created this bank. And the president of the bank is rotating between, the first one was India, now it's Brazil, Marcos Trojo. And as Andrew was saying, there are not only the BRICS countries part of the New Development Bank, but others, And actually now they are also negotiating with Uruguay and others, and also the Asian Investment Infrastructure Bank as part of the BRI. So what you see is the creation of institutions that give continuity to these trade agreements and these investments. And we have never seen this before since the end of the Second World War. So this is very important. And also, we define emerging market multinationals, but after what Mark said today, probably we'll have to review the concept, but we define them by headquarters. And another thing that we are seeing is that Chinese companies are growing everywhere, helping the development of China, and they are growing everywhere, a lot in other emerging markets as well. First was mainly natural resources, but now we see more and more services, electricity, the second biggest company in the world, State Grid Corporation of China, SGCC, going into so many countries, the biggest bank in the world, ICBC, being present in more than 50 countries and territories. So you see this expansion in how more and more these companies that were traditionally dominated, these industries that traditionally dominated by US companies that are the object of desire of all the MBAs are being challenged by companies from China and other emerging markets. And we look at it, but that's the subject of another webinar. We look at it with plenty of data, with the EMI research team, how they are expanding all over the world. And that's a very interesting phenomenon, also for different reasons. So we have seen the typical maquilas in Mexico and in other parts of the world. So traditional multinationals, and now this is being put into question, that move to China, Vietnam, and other parts to lower the labor cost, to become more efficient. But these companies from emerging markets, they already have low labor cost in their own countries. So what they are doing, they want to move to expand the market, but also, very important, to gain knowledge and brand, intangibles. That again is a swift change from what we have been studying in business school, and very interesting phenomenon.
Thank you, Lourdes. I see that actually in the chat room, questions are coming in from the audience. So let's use maybe the next 10 minutes also for the panelists to respond to some of these questions. Let's see. So the first one, I think most of the questions, the audience didn't indicate who the question is being asked to. So feel free to jump in. So the first question is actually pretty blunt. So the question is, so is the concept of emerging market actually outdated?
Let me start with that. Let me say definitely not, because as I mentioned earlier, the idea of emerging markets is emerging. In other words, a sense of growth. So what we're looking for as investors are countries and companies that are growing at a faster rate. And of course, our experience has been those countries that are growing at a fast rate have the greatest opportunities for investment. So, and China is probably the best example of that. In the last 2 decades, we've had incredible growth in China and wonderful opportunities to invest. So most definitely not, emerging market concept is not dead, but is evolving. As Anne's work shows, we have to redefine what is an emerging market and what groups we should focus on, but it's definitely alive and well.
And may I invite you also to respond to this question?
Yes, definitely. I mean, I fully agree with Mark. It's definitely not an obsolete thing. And also, if you look in the perspective, One of the reasons why some people, especially last year and this year, are asking, are emerging markets still emerging, is that because they have been seriously hit by the crisis. But eventually, if you take a perspective of about a decade and even the potential, according to an international organization, I think you have a more sober judgment. Emerging market is still emerging. They may be different. The pace of growth may be different, but definitely they are there. I think that is also very important is that the rise of emerging markets had also meant that, if I could say, the domination of what we used to call the North is not what it used to be. I would not say that it's not longer there, but it's changing. So I think it's a phenomenon that we have also to take into account. And yes, there will be emerging economy, perhaps not necessarily the same. The change, ranks will change, but definitely there is a movement which is that the global economy, as we used to know it even 15 years ago, is definitely over. A very strong statement, but I think that's the situation.
Thank you, Anne. So the next question, again, no, not being asked to a specific panelist, but this question is from John. So emerging and advanced economy GDP growth has converged for the first time since the late 1990s. So what are your expectations for emerging market GDP growth over the next few years? So it's about the growth, again, growth rate.
By the way, I'm not sure of those numbers because the numbers that we have show that emerging markets still are growing as a group at double the rate of the developed countries. It's for developed countries, we calculate it's about 2%. For emerging markets, about 4%. So emerging markets growth is still there. There's no question about that. Particularly if you're including China, India, as Anne has pointed out, India is growing at a very rapid pace, and that brings up the average. But there are many other countries, Vietnam, that are growing at a very fast pace. So I think we have to look at the numbers carefully, but in our view, emerging markets still are growing at double the rate of developed countries.
Yeah, we agree. Maybe, Mijika, you can show the data from last year. So we were under the same impression because there is a lot of talk that emerging markets are not growing as much. But as Mark said, when we compare 2010 growth, that was the golden era of emerging markets, to 2010, 2020 growth, the average is still very important. So I think nominal rates, we have like 5.3, I don't have the data in front of me, the previous decade 5.8. So E20 countries definitely continue to grow at almost double the pace than developed economies, as Mark pointed out. That's our data from last year analysis. And it was, again, a pleasant surprise for us because there is so much talk in the press that the growth in emerging markets is slowing. Yes, it's slowing because, of course, when you have the size of an economy of China, just to give a point of comparison, China last year was the size, the GDP nominal, the same as the size of US in 2014. That year was an excellent year for US, and everybody praised that growth of 2014. That was, if I remember correctly, 3.4. So you cannot ask an economy the same size as the US to say that it's disappointing growth because the growth goes down to 6%. It's still tremendous numbers because the size of the economy is so much bigger. So then, yes, that's for China, but as Mark is pointing out, we have a lot of Asia. The difference is between Asia and Latin America. Latin America's growth in the last 5-6 years, because the economies depend still a lot from the prices, the commodity prices. Since commodity prices collapsed, then the growth was not there, as Mijika mentioned, that this divide between Asia and Latin America. But again, Africa, we tend to forget about Africa. Africa is growing a lot. One of the countries that is now in tremendous turmoil that hopefully they will be able to solve, Ethiopia. Ethiopia grew a lot we don't consider it an emerging market because it's still behind in terms of, not in terms of growth, but in terms of size of the economy and GDP per capita. But definitely, I believe it's 6 of the 8 countries that grew the most in the world in the past decade are in Africa. So Africa is doing a tremendous effort, and we don't mention Africa enough. And definitely we'll see more countries. We have now Egypt, Nigeria, and South Africa among the E20, but definitely we'll see more in the next years, for sure. And I don't know if you want to add something else, or Mijica.
Okay. Mijica, do you want to add anything?
Yeah, sure. I mean, I think just echoing what, Lourdes said, I think it's really interesting when you look at the last decade, in our rankings that Andrew talked about, the countries that exhibited the most growth were, as he talked about, Bangladesh, China. The Philippines was also actually quite high, as were Indonesia, Thailand, Malaysia. So, as Lourdes said, even in these countries which maybe don't get talked about as much, or we're not seeing constantly, those numbers in the news, there's been a lot of really high growth. So it's really interesting when it analyzed from, kind of a post-COVID perspective as well to see those changes.
Thank you, Mijica. So the next question is about World Bank. So is there evidence that the World Bank and IMF sometimes stifles economic growth in an emerging country's economy? What do we think?
I start out by saying this. We wouldn't be here if it wasn't for the World Bank. The reason why I mention that is that you must remember when we started, the whole name Emerging Markets came out of one of the World Bank subsidiaries, the IFC, the International Finance Corporation. And they were the ones that really started the very first Emerging Markets Fund in 1987. It was an institutional fund. We started a retail fund at that same year, but it was the World Bank and their constituents who really put emerging markets on the map. So I think we have to really congratulate the World Bank for their work.
Also, I would add that actually the both the IMF and the World Bank is okay. There has been criticism of both institutions because sometimes they have been imposing very strict type of economic models that have been like copied and pasted from US or Europe and have not worked as well. For instance, very radical privatization programs have not been as successful as one would have expected for sure in Latin America and Eastern Europe. So then, yes, there is this criticism, but I would say, as Mark mentioned, that, for instance, in this crisis, both the World Bank and IMF were very pro-cyclical in the sense that they said, whatever it takes. They were very much, they were behind debt restructuring initiatives. They were behind a number of, and I would like Anne to add something else because we looked in a chapter on these issues, the completely different role of IMF and World Bank in this COVID crisis, in the terrible crisis of 2020. Maybe you can mention, Anne, whatever behind the IMF initiatives in the last year.
Yes, actually, it's very funny, especially for people who have been working on the development issue. We remember the 80s and the 90s, where basically the so-called Washington consensus were very much criticized. And for the reasons actually that Lourdes mentioned, it was also the time of the debt crisis and the budgetary restraints and our balance was kind of sacrosanct. We have seen with the crisis a complete, I would say, the U-turn actually of the position, in particular of the IMF, supporting the budgetary expenses of all countries, developed but also developing countries. So I think one should not have such a, perhaps a harsh assessment. I think the things are changing because perhaps the situation was exceptional, but we end up with countries, having, including in the developing world, having between 8 or 10% of the GDP in terms of additional expenses to address the consequences of the crisis, or countries even opting for quantitative easing, which was basically something which was unorthodox for years. It has been used by some developed country, but never by emerging economy. And because of the crisis, I think more than 20, a large number of emerging economies have used the quantitative easing, and there have not been there has not been criticism, for instance, from international organizations such as the IMF against it, while it used to be an instrument that was not really in favor about 20 years ago. So I think the perspective has a change from that point of view.
Yeah, in social programs also, we have seen social programs during the crisis all over the emerging markets, from very conservative governments that you would have not expected. So from very conservative, sometimes we have seen more rigidity in expanding social programs from governments in emerging markets that have been considered a little bit more like left-wing, while what has been not before like right-wing or so-called right-wing governments have been expanding. Strangely enough, China has been much more cautious in terms of social programs during the crisis, while other countries have been very generous, and IMF and the World Bank have been supporting these programs, which has been extremely interesting. And we are seeing now economies growing a lot. Hopefully, this very latest variant is going to be milder. Hopefully, we don't know much about it, but definitely we see all emerging markets on the rebound for a number of reasons. Very high commodity prices, so I'm sure there is a tremendous window of opportunity for countries that are exporters of emerging markets. Copper, iron ore, oil, etc., have grown a lot, and that gives room for breathing for definitely Latin America and African countries. From Angola to Botswana, Nigeria, of course, exporting commodities, and this is a tremendous window of opportunity. And hope. So definitely the lows were very low last year, but the highs are very high. Latin America, for instance, the forecast is 6% growth in 2021, which is really great.
Thank you, Lourdes. We only have a couple of minutes left. I found, interestingly, we almost didn't mention COVID in this session. I think Andrew mentioned it once. And but I heard Mark said right now majority of the earnings are from the emerging market. But if you look at sort of the healthcare capacity, the resilience, maybe the developing world actually have lower capacity to fight, right? The impact is more devastating. So can we make, can you make a quick comment on how you look at this? Because the pandemic, unfortunately, might not be a one-off thing. So how would that kind of disaster influence the emerging market and then the world?
Well, the reality is that we're able to together. Now I'm here in Dubai, you're in America. I don't know someone. I think Anne, you're where, in France or somewhere else? So anyway, we're able to, with the technology, to operate and function, and that's the wonderful thing with this COVID. It really has not interrupted a lot of businesses, and in fact, it's even enhanced many businesses and many economies. So, in fact, life goes on, and it's just amazing. And I was so happy to see that Andrew, in his work, he mentioned cell phone penetration. This is so important in emerging markets today because they're able to use this technology to do business, to transfer money, You all know about the Kenya M-Pesa company that does transfers with cell phones. This is an incredible development. So actually, COVID in some ways has helped to push technology in these countries.
Yeah, and I just would like to add that if we look at central bank digital currencies, again, because of the M-Pesa and other advancements are leading, and also, strangely enough, El Salvador, the first country in the world using crypto as a legal tender. Let's see how the experiment goes, but definitely other emerging markets are looking. So as Mark is pointing out very rightly so, smartphones are now everywhere. And so not only mobile, but also smartphones that allow internet connection and allow mobile payments. And we have seen the pandemic accelerating mobile payments all over the emerging markets. So ending in a positive note.
Right. So we're at the 1 hour mark, and then we're not able to ask all the questions, including questions on the geopolitical risk evolving in different markets, which gives us ideas for our next webinar maybe. So now I'll hand it back to you, Lourdes, to do the closing remarks.
So thank you all. Thank you very much, Mark, because you are an authority in emerging markets, and we are very grateful for this collaboration that we are having for the last months. Thank you, the researcher Mijica and also Andrew, both, and they are representing also the EMI research team. A lot of knowledge at Cornell and a lot of ideas and pushing forward the research on these subjects. And thank you very much, Anne, we are co-authors of a number of books and reports, and grateful for this very rich research experience. And also we are very happy with the collaboration with the Cornell China Center. Thank you very much, Ying, for being a partner in a number of initiatives. We are very happy with that. And last but not least, thank you to Nicholas Phillips and the eCornell, and also behind the scenes, Nina and Danielle, who have been doing the backup in the streaming to China. So very grateful for this collaboration that, as Mark says, allows us to have very interesting discussions with the public and within Cornell. So thank you very much.
Thank you.
Thank you.